Hey there. So this is Sarah. She lives in a country with a struggling economy. Her government is buried in debt, billions and billions of dollars owed to other countries and banks. One day, Sarah asks a simple question. If we're in debt, why doesn't the government just print more money and pay it all off? It seems logical, right? You need money. You print money, problem solved. But wait, hold on. If it's that easy, why do countries still have debt? Why doesn't every country just print their way out of financial problems? And why do some countries that tried this end up in total economic collapse? In this video, we're going to dive into government debt, money printing, and why you can't just print your way to wealth. Government debt, also called national debt or public debt, is the total amount of money a government owes to lenders. These lenders can be other countries, banks, or even citizens who buy government bonds. When a government spends more money than it collects from taxes, it has a budget deficit. To cover this deficit, the government borrows money by issuing bonds. A bond is basically a loan. When you buy a government bond, you're lending money to the government. In return, the government promises to pay you back the original amount plus interest after a certain period of time. So, governments borrow to pay for things like building roads and bridges, funding healthcare and education, maintaining the military, supporting social programs like unemployment benefits, and responding to emergencies like natural disasters or pandemics. Most countries in the world have some level of debt. Even rich countries like the United States, Japan, and Germany carry trillions in debt. The U.S. national debt, for example, is over $30 trillion. Now, the number's so big it's almost impossible to imagine. But here's the thing, having debt isn't always bad. Just like a person might take out a mortgage to buy a house, countries can manage debt as long as their economy is growing and they can make regular payments. Debt becomes a problem when it grows faster than the economy, making it harder and harder to pay back. Now, let's get to the big question. Why can't governments just print money to pay off their debt? At first glance, it sounds like a perfect solution. You owe money, just print it and hand it over. But here's why that doesn't work. The first reason is inflation. When a government prints too much money, the value of that money goes down. Why? Because money's value depends on supply and demand, just like anything else. If there's too much money in circulation, each unit of currency becomes less valuable. This is called inflation. Imagine you live in a small village where only 100 apples exist, and everyone is $10. Each apple costs $1. Now, suddenly, the village leader prints more money and gives everyone $100 instead. But guess what? There are still only 100 apples. What happens next? People start competing for those apples and bidding higher prices. Soon, one apple costs $10 instead of $1. The money didn't create more apples. It just made money worth less, and prices went up. The second reason is hyperinflation. When a government prints way too much money, inflation can spiral completely out of control. This is called hyperinflation, and it's one of the worst economic disasters that can happen to a country. In hyperinflation, prices can double every day, every hour, or even faster. One of the most famous examples is Zimbabwe. In the early 2000s, Zimbabwe's government started printing massive amounts of money to pay government salaries and cover budget deficits. At the peak of the crisis, inflation was so bad that a single loaf of bread cost billions of Zimbabwean dollars. The government even printed a $100 trillion note. The currency became completely worthless. People stopped using it altogether and switched to foreign currencies like the US dollar. The third reason is loss of trust. Money only works if people trust it. If a government prints too much money, people lose confidence in that currency. They start using other currencies or assets like gold, US dollars, or even cryptocurrency. When trust is gone, the currency collapses. The fourth reason is foreign currency debt. Here's something important. Not all debt is in a country's own currency. Many countries, especially developing ones, borrow money in foreign currencies like US dollars or euros. If a country prints its own currency to pay off debt, that doesn't help if the debt is owed in dollars. So, in conclusion, printing money causes inflation, hyperinflation, and economic collapse. Countries must manage debt through economic growth and smart policies. If you want more videos like this, please like and subscribe. Thanks for watching.